The following segment is sponsored by Xterra Incorporated, trading on the TSX Venture Exchange under the symbol XAG.V. Xterra plans to become a mid-tier producer of silver and base metals through the development of its Bilbao deposit located in the central Mexican mineral belt in the state of Zacatecas, as well as through additional exploration and acquisition opportunities. Find Xterra on the web at xterra.ca. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Great to be with you, Ellis.
I'm wondering if we would have been taxed less under the British.
Well, it's par for the course, as they say. It's definitely times when the more you promise goodies, somebody's got to pay for it. A lot of people don't still to realize is that the government really doesn't create anything. It's a transfer agent. They transfer from the productive to mostly the less productive. And that's not to say that we aren't cognizant of people that probably aren't as fortunate. I certainly contribute voluntarily to some causes that I believe in and that type of thing. But you're sitting there working really, really hard and you just don't seem to be getting ahead. You kind of feel like you're a hamster on one of those wheels. It can be discouraging, and I think a lot of Americans feel that way right now.
Well, with the passing and implementation of Obamacare, doesn't the taxation affect everyone, including those that are much less fortunate than either you or I?
Indeed. We did a study on it, very brief, in the Morgan Report this month. I debated whether or not to put it in there. But it was pretty objective. I mean, basically, it took a case of with or without Obamacare and what it would mean to someone that had hired an employee. And it's very crystal clear the decision that would have to be made. And so it's really a drag on the economy. Now, the idea that, everybody that's in the continent, in Alaska and Hawaii, has got health care and all that, that sounds very noble, but who pays for it? And part of the problem is it's not a free market system. It's mandated. And before the Obamacare, it was a mess because the insurance companies are involved. There's all these fees and paperwork and all this stuff that's required that adds costs, slows the system, makes it less efficient. Contradictory stuff state to state. You're traveling across state lines because you were hurt over here, but your insurance doesn't cover it in that state. I mean, on and on it goes. So it's a mess. It really should have been kind of like scratched and started over, and I don't think it's a national policy. I don't think it's, something that is a given benefit just because you're born here that you get health care coverage. But it does, objectively, study with just the numbers involved. It doesn't help. It hurts.
Let's talk about the paper money trail, which you've been writing about. I can hardly see my feet while I wade through it.
Really, there's maybe some misunderstanding, and I'm probably guilty of it myself, which is, there's this printing going on. Well, really, it's borrowing. So we're in debt, we're borrowing more. So it's analogous to somebody with a credit card is really a good analogy. So you have a credit card, and you have a limit on that credit card. And all you're able to do is barely make your interest payments on that credit card. Now you've hit the ceiling of it. You have a $5,000 limit. You've hit the limit, but you got to keep going, and you don't take enough in to do anything more, but you got to. You're forced to do it. You really think, you need something new. You got to buy something new, whatever it is. So what you do is you go to the credit card company and you say, I just need you need to up my limit. Well, you're at the limit. So this argument goes back and forth. And okay, you up the limit. Well, now you're worse off than you were before because you could barely afford the interest payments before. And now the limit gets extended again, and you keep doing this again and again, year after year, time and time again. So you get to a point now where to make just the interest payments, what you've got to do is you've got to call your uncle and say, look, I know that I owe you a bunch of money, but all I really need is $200 this month. And that $200 goes straight into the credit card interest-only payment, which is basically what the Federal Reserve is doing. If you look over John Williams' work that I received last night, I've been a subscriber to his work for a long time, but his most recent update was yesterday. Basically said from the beginning of the year till now, 100% of the Treasury market has been supplied by the Federal Reserve. So you're in that situation. So the analogy, as corny as it sounds, is a pretty good analogy. You've got a credit card that's maxed out. Now, that's the current account deficit. That's what we owe as of today. That's what you've done with that credit card in your pocket over the last few years. The long-term liabilities is what you owe in the future, and those are way beyond the $17 trillion that we keep talking about. So there's really no way in the world that this could be paid off at present value. In other words, the dollar worth the 3.5 cents that it's worth now relative to what it was in 1913. Can't be done. So you're going to inflate it away, or it's probably going to be a combination of things. It'll be more inflation. It'll probably be some debt that's reneged on. In other words, just payments won't be made.
Do you think that the banking crisis, which went down a few years ago, along with the feds pumping money into the banks, contributed to this debt issue in a way that's irreparable?
Yeah, I think the crash of 2008, where it manifest, was beyond repair. So my view is that even though we've had some betterment in the system, that has never been reconciled, and nor can it be. So if we back up and look at what happened there's a lot of things that happened, but the main crux was that there was a lot of these mortgage-backed securities and these pooled accounts, these securitized debt notes, and these credit default swaps, and all these derivatives, that a lot of it revolved around real estate. And it got to the point where Bank A and Bank B didn't trust each other's paper. In other words, this securitized note that was a bunch of mortgages pulled together, Bank B said, I don't want it. It says it's worth, make up a number, it's worth $400 million, and I don't want to give you 4 cents for it. And so basically the system was about to freeze up. Bank A didn't trust Bank B, Bank C didn't trust Bank A or B, and none of the banks were trusting each other's paper. In other words, their debt. Not all the debt, but primarily, again, these mortgage-backed securities. And then these credit default swaps, which were supposed to protect if these mortgages went bad. Well, those weren't going to happen either. In other words, there wasn't enough money in the system to make the insurance good. So what happened was the Fed came in and started waving their arms, that's me speaking, not them, and said, look, A, you don't trust B, B, you don't trust A, so here's what I'm going to do. I'm going to make good on this stuff, and I'm going to substitute it with Treasury paper. And everybody trusts the United States Treasury paper because, after all, it's backed by the full faith and credit of the United States. But really what that means is it's based on the workload of the capacity of the people out there that are working for a living, that they'll be able to pay it off for the government. They're spending that money on your behalf without you having much say in it. But no one really goes that far very often. So the banks say, oh, fine, well, we'll take that. So this is part of this ongoing $85 billion per month, and that's the minimum. Really, a lot of times the interest that rolls over and accrues to the Fed gets spent for even more than $85 billion. 2 months ago, it was $114 million that they spent. But regardless, they're buying this toxic debt, these mortgages and T-bills, to basically relieve the banks of a major problem, which was bad loans that couldn't be paid.
So those bad loans are still the beginning of the end.
Well, that's part of it. I mean, it's a big picture, and I don't want to make it complicated because it's pretty simple. It's debt. It's debt in all forms, really. It's these mortgage debts, which was one of the primary causes of the 2008 problem. It really happened in 2007, manifested in 2008. So that's part of it, but it's all kinds of debt that can't be paid. I mean, some of these bond issues that are floated in the municipal level, the school bond for ABC in Virginia, or those type of things. I mean, it's municipalities. Look at Detroit. It's bonds at the municipal level, at the city level, at the county level. It's the stalwart of all, the U.S. Treasury bonds. It's the securitized debt mortgages. It's all kinds of debt. And basically, we're over indebted. It cannot be paid. There isn't enough productive capacity. We could triple our productive capacity and maybe get out of this thing, but I don't see it going up 300%. And people can't work 24 hours a day. They're not that productive. It's impossible. I don't want to be too big a gloomer, but it's very difficult, and it isn't like it hasn't been done before. I mean, these fiat systems always end badly. And they always end because of a debt crisis, or in almost cases, they end as a result of a debt crisis. So how much further can it go? What other tricks or what other rabbits are going to pull out of the hat? What else can happen? I don't know. I don't have a perfect crystal ball. I have looked at it. I mean, again, I think we've talked on your show before, Ellis, but read Collapse of Complex Societies, and it goes through like from the Byzantine Empire onward on different societies and how they rise and fall. We're in a situation where the economy, in my view, certainly hasn't recovered. Not the physical economy. Maybe the financial markets have done better, and that's okay. But financial markets aren't the real economy. How many places around you, Ellis, have got help wanted signs around?
Well, not very many.
Yeah, there's not a bunch of help wanted signs. There are some jobs available, and they're mostly pretty high-skilled jobs. And there's a lot of, service jobs. I mean, a lot of people that are back and quote-unquote employed are people that used to have a higher skill set that couldn't find something in their normal work capacity, and are working at a job that doesn't pay as well. That's maybe a service job or something like that. So I don't really see the kind of boom that we had in the 90s when we were going into this huge technology thrust. It went from, pick a number, 1990 to 2000 or so. I mean, that's high tech, and there was all the software and these storage places, and the computer industry was just booming. That's history. That has not happened, and I don't see it taking off again. In the computer industry, most people did need, or at least could make use of, or by having a computer could increase their productivity, or at least that was the sales pitch. You know, that was a big boom for a long time. But I don't see anything around the corner. Not that there isn't one. Not that I'm not missing something. In fact, I hope I am missing something. I hope there's something huge like that just down the road. But I don't see it.
We'll be right back. The Ellis Martin Report is sponsored by Xterra Incorporated, trading on the TSX Venture Exchange under the symbol XAG.V. Xterra is a Toronto-based resource company, and their primary project is the Bilbao silver-zinc-lead-copper deposit situated in the Panfillo-Natera district of Zacatecas, Mexico, approximately 50 kilometers south of the state capital of Zacatecas, where Xterra is currently completing a bankable feasibility study. Between the company's Bilbao, Laguna, and Panfillo projects, Xterra has a resource of 100 million silver equivalent ounces, including 33 million ounces silver in 43101 compliant resource. Zacatecas is a well-known mining district with infrastructure in place. Mining opportunities are both open pit and underground. There are no significant environmental issues, and there is an available local workforce there, as well as goods and services for development of the projects. You can find a full investor prospectus on Xterra's website. Just log on to xterra.ca or find their logo and click through on the homepage of our website, ellismartinreport.com. And we're back. Is China now pricing themselves out of the labor market? Are we going to see more factories open up in the U.S.? That would turn around a portion of the economy, wouldn't it?
Well, it's interesting you bring that up. I was just on this Retirement Revolution webinar, and Elliot Gould was on there. Very smart guy, and talked about, energy costs are so low in the U.S., especially natural gas, that we actually have an advantage for manufacturing now. So, yeah, there could be a rebirth of manufacturing here. I'm a bit skeptical of it, but it could. Perhaps it will. I'm not sure. The main idea for me is that what is the capacity globally, and how distorted is it? I mean, people in China certainly want a higher standard of living for the most part. Can that be achieved? Yes. Is it being achieved? No. Why? Because they caught the Keynesian disease from the Western bankers, and they've misallocated capital. They built cities that no one can afford to move into, these great big apartments. I think last time I checked, it's been a while, there was like 30 million empty housing developments. In other words, 30 million apartments, if you will. Well, 30 million is a huge number. I mean, Canada's population is around that. So this is unfilled space. So if they had gone where the market determined, what size building and that type of thing, and what price, and the market determined the price, there'd probably be a lot more people in the cities working or whatever. Now they've got these situations where they're really a problem for China. And, of course, their economy is slowing down, and they've done their best, like the U.S., to try to pump it up, feed more money into it. Well, if you feed more money into it and put it where you think it's done best from top-down planning or central planning, it's been proven always, everywhere, every time. It doesn't work. It's a bottom-up approach that works the best.
A currency crisis usually dictates a strong correlation to a surge in gold and silver prices. In stocks, we've seen it before. We're not seeing it now while we remain in the crisis. When do we see the reconnect between the two?
I'm probably not going to like the answer. I think we've got about 2 years before we really get back up to like all-time high in silver, which means like $50. For gold, I think we can get into the $1,900 level probably in 2014. Gold probably could lead silver, maybe not in percentage terms, but it will be at its nominal high, which is the 1,900 plus level, and I think it can be there probably next year's time frame. Silver, I'm not so sure. I think silver's got much more upward resistance than gold. It moves more wildly up and down. But all that aside, I mean, there's so much going on in the financial markets, and these markets are so teeny tiny that they can move overnight. I mean, basically, if there's a lot of demand, forget everything I just said, they can move very quickly. So barring that, I think you're going to see up from here pretty much, but we're at $22 silver now, and we're at 48, so we've got to work through everything at the 26 level that's been there for a while, then everything at 28, then at 30, then at 31, 2, and 3, then at 35, and then once we get above that level, then it's going to be able to move up to into the 40s fairly easily. But how long will that take? And the answer is probably will take several months to work through all of that. It may not, but that's the way markets normally act. And gold's a similar story. Gold, I think, has a stronger base and more interest in it than silver. We know that. It's a much bigger market than silver. And the Chinese have kind of got the Chinese put, meaning that, anytime it's in the low 1300s, they're willing to buy more than their big stroke that they're already buying. So there's a lot of demand for physical gold. I'm not sure that the physical demand for silver is that big in Asia. We did a special report from Leo Chang, who actually translates the Morgan report into Chinese. So he's there, he deals in the coin market, and he gave us his take on the ground. Of course, now this is one fairly good-sized dealer, so we're not trying to base the whole Chinese silver demand on one pretty good-sized coin shop. Nonetheless, it's real empirical evidence. We know what it's like from him in a small area, and how much can you take that and project out, I don't know, but we did get the idea that gold is much more prevalent and wanted, I'd say, in Asia than silver is. Not that it's not wanted, but it's not known as much as an investment, although I think that's changing as well. I've seen that just in my trips to Hong Kong, but nonetheless, Asia for the most part gets the gold story. Asia for the most part doesn't really understand silver.
And to hear and read more of David Morgan's thoughts and analysis, it's themorganreport.com. I'm a subscriber. How does everyone else become one?
Well, I think the best thing to do is just get on our free list. It's right there at the top of the page, and if not, you can just click one of the pull-down menus and get on the free list. Once you're on the free list, then you're allowed to subscribe to the Morgan Report for a 30-day free trial. So you get into the members-only part of the website. You can see several reports. You can see everything. You can see all the special reports, all the updates, all the videos. I mean, there's a lot there, too much basically even just to describe. And you have that access for 30 days, and then after that you make a decision whether it's for you or not. So I think that's the best way to approach it.
David, once again, thanks for joining me today on the program.
My pleasure. Thank you.
I've been speaking with the silver guru, money, metals, and mining analyst, David Morgan. His website is themorganreport.com. Listen to this segment again on the homepage of our website, ellismartinreport.com, or download the entire Ellis Martin Report on iTunes. The preceding segment has been sponsored by Xterra Incorporated, trading on the TSX Venture Exchange under the symbol XAG.V. Xterra plans to become a mid-tier producer of silver and base metals through the development of its Bilbao deposit located in the central Mexican mineral belt in the state of Zacatecas, as well as through additional exploration and acquisition opportunities. Find Xterra on the web at xterra.ca.